And it's time for another market talk. At least from my perspective, there are quite a few changes compared to what I was thinking 2 weeks ago. So yeah, let's start. So maybe Ted, let's start with you today. So what changed and what do you see in the markets?
Good questions. Lots of the same. So let's take a peek here. Bear with me here while I get to this screen. And share. Okay. One more moment. Okay, thank you. Sorry for the delay. So I'll touch on macro regime. I want to reinforce my forward look, which is a regime phase transition from the current to a new regime. Want to take a look at market signals and then positioning and trades. So as you know, from the subscription service that I have to 42 Macro, they've been in Goldilocks, which is growth up and inflation up. And indeed, we looked at recently retail sales came out since we last talked in the US, which is a big driver of overall growth in the US economy. I thought it was a weak number, but the end result of that number is that we had GDP now, which is the Atlanta Fed's real-time forecast for third quarter GDP, which is now behind us, at 3.4%, which if you're looking at 2.5% or so CPI, then we've got nominal GDP humming along in the upper 5s to 6%, which is pretty strong. The things that we looked at last time, we had just had CPI out, which was a little hot, but still down on a month-over-month basis at 2.3%. We saw the core inflation rate actually start to tick up to 3.3%. And so, we're starting to see some of the core inflation metrics start to move up. We have PCE reporting next week. PCE, which is the Fed's preferred inflation gauge for August, was down and really at a cycle low. And we saw core PCE like CPI core tick up in August just a tad from 2.6% to 2.7%. So, been a benign inflation environment as it has been in Europe. It is here. So here's what's going on. So this is the Cleveland Fed. I use these guys because they do all the work, and they have been pretty spot on in terms of their overall forecast. But what you see is that for September, they're anticipating PCE to tick down to 2.06%. But in October, we can see they're forecasting an acceleration to 2.2% and to 2.71% in core PCE. So we're in the situation where, from a policy point of view, we have central banks around the world cutting. Most recently, Canada cut by 50 basis points. I guess 50 is the new 25. But what we have in terms of the forward rate expectations is we've got an expectation for 25 basis point cuts in the next two periods, in the next two meetings, rather, just after the election in the United States on 11/7, and then another cut on 12/18, December 18th. And then maybe, we're reaching this sort of terminal rate, or maybe what's called the neutral rate based on current expectations, somewhere in the 3.5 to 4.0 rate for short-term rates. So we've got policy rate from a policy point of view. We've got central banks cutting rates and markets raising yields. So basically that 10-year bond. This happens to be TNX, which is a proxy for the U.S. 10-year, bottomed or troughed on the day before the election. So we had. Not the election, the day before the Fed met. And then the dollar followed suit the following day. It bottomed on 9/18, which was the day of the Fed meeting. Meanders along the bottom, and then just basically has spread higher by about 4% over that period of time. We've seen the curve steepen, but I will say my steepener trade has not worked. In part, the initial part of the steepener This is the 3-month 10-year yield. The steepener started really as a bull steepener, meaning short rates came down, but then we had a this changed into a bear steepener, which did not, with volatility going up in the treasury market. This, even though the yields have started, or the curve started to steepen, my steepener trade, I got washed out a while ago. So it's interesting. And, one of the things I've been paying attention to for a long time, although there's been a delay, what happens when the 3-month and 10-year disinvert or deinvert, we have a recession. So these gray boxes show when this thing comes back and deinverts, we've had a recession pretty consistently. Everybody's been saying it doesn't work this time, but the reality is that's for another day, not something we need to worry about for at least another quarter or so. When we look at what's happened since the Fed cut, we've seen bond yields. This happens to be a proxy aggregate bonding index. The AGG has been down 2.9%. This was through yesterday from 9/18. So this is the day of the Federal Reserve rate cut. We've seen bonds go down. We've seen the S&P 500 tack on 3%. We've seen gold shares rip 5.7%. Commodities have meandered around. This happens to be PDBC. And then we've seen the dollar rip almost 4% off that move, down some today, obviously, but 3.5%, 4% on that Federal Reserve move. So really sending pretty strong signals about what's working and what's not. I argued last time when we talked and met in Market Talk 38 that was a regime change underway. I'm saying yes, I think it is. I think we're moving from a Goldilocks to a reflation trade with growth and inflation up. I think that'll continue to manifest once we get through the election. We also talked 2 Market Talks ago, back at Market Talk 37 at the end of September, what happens when the Fed cuts with SPX near all-time highs. The reality is, over the 4 instances that's happened in the last 30 years, we've had positive returns of 2.3% for 1 month, 5.5% for 3 months, 9.8% for 6 months, and 12 months, 16.2%. And just going back to that previous slide, we see that SPX is up almost 3%, and that's 5 weeks out. So my view is, assuming we can get past this election with some clean result, my base case is that we have some smooth sailing here, particularly in equities on a moving forward basis. From a signaling point of view, as you know, I was cutting bonds and steepeners heavily the last 2 weeks. I'm pretty much out of all my bond positions. I have 2 positions left. I'll talk about those. I'm also long U.S. stocks primarily, some EEM and some EFA and FES, but I've hedged all those positions, and I'll explain that in a minute. I'm also long gold and metals. I have a small long U.S. dollar trade, and on a tactical trade level, I want to just talk briefly about SLV and UNG. I haven't shown my dynamic positioning portfolio for a bit, but I'm almost back to where I was in April timeframe before this ramp in bonds took place. We started getting really long bonds here in the 510, 524 space. By now, I'm down to about 4% bond position. Just HYG and BNDX, and both of those are starting to signal that I'm starting to get stops hit on that, and I have a 4-day period before I take off all my stops. Then equities, my target is 29% in this portfolio. I am not there yet, but I've been adding to it and hedging the position so that I can get in clean, hopefully, after the election. Commodities are up a little bit. Mostly that's because I've got gold and GDX. My other commodity positions have not worked so well. Alternatives are minimal. And then currency is just the UUP position, and I'm 58% cash. So what I would like to do is just run through a couple of trades, a couple of positions here. I want to start with BND. This is a weekly chart. Of bonds or aggregate. It's similar to the aggregate bond index. It just happens to be the Vanguard bond index, the BND. That gave me a weekly sell signal. several weeks back. You can see this ugliness here, which corresponded pretty well with where my stops started to hit. I've been long this position since May, and was trying to add in here, but basically got stopped out, and so I am out of that position completely. Again, this blue line here is the 3-month. It happens to correspond with July 26th, which is the 3-month look back from this past Friday. So I'm out of BND. I'm still hanging on to HYG. This position actually I've had for almost a year and traded around it, added to it. Been a pretty big position, and my stop got hit yesterday. It's actually, I believe it's back above my stop level. Yeah, so I'm 3 cents above my stop level right now, but I did take some of that off yesterday when it got hit. Again, 4 strikes, stop hit, I take 25% off, and then over the next 3 days, I take the rest of it off. So that's right on the margin. Maybe we bounce from here. Maybe this position stays. BNDX, which is International Bond Index, same scenario. I actually got a stop yesterday, so I took a quarter of that position off. Still holding the position. Trend is still bullish, but bonds are under pressure, and I'm not really wanting to add bonds here. Qs are interesting. This is a weekly chart of the Qs. It's been bullish, trying to put in a new high, hasn't been able to do so yet. It is one of a number of different equity allocations that I've tried to get long into. As you may recall, if you just look at SPY, look at the SPY, I had this whipsaw. I was out of stocks here when actually in advance of August 5th. This thing whipsawed me around, and I ended up with a very small equity position as a result. So I've been trying to get back in. I've got Qs, I've got SPY, but just looking at Qs, it's a new position for me. I put it on when this thing pulled back on the 15th. I simultaneously hedged. I bought a 490 by 480 put spread with a 1220 expiration. Qs have kind of meandered along, been positive, sold off yesterday, and then of course we're back today on the Tesla contribution to it. But I'm trying just to get through the election, trying to build a position. My supposition is this goes higher, and as long as I don't get stopped out, I'm still long and hedged. Similar situation with EEM. I've been long this for a while. I did add here on this pullback, middle of the month. That was on the 15th of October. I added and hedged with a 45.50 by 43.50 put spread, again at 1220 expiration. I'm not expecting to hold these past the election, and so if we start to get some movement higher, I will be taking the put spread off and hopefully hanging on to the position, and hopefully it goes higher. IWR, which is mid cap, I started adding to this back in early October. I added again this week on a pullback. I am unhedged here. My stop is somewhere below here. My stop is, where's my stop? IWR. Stop is 87.92. So right around here, just below this thing. It must have gotten close to getting hit yesterday. Didn't get a notice. GNR, I told you guys last time I was adding to this. This is a natural resources ETF. Natural resources have been sort of a riding or getting trounced by whatever the oil market's doing, which seems to be all about geopolitical risk at this point in time. I got long here, I got out here, out of GNR. Gold, this is a weekly chart. I don't know, this thing keeps going higher. I have not added to my position. Just before our last time we met, I took some off, and I'm just sitting there not doing anything with it. I told you I'm a terrible GDX trader, but last time we were here, we talked about building this position in GDX. And so I built it right down to this point here, which was back on, what date was that? Back into, I think my last entry was on the 9th. and I took some off on Monday. I still have a decent sized position. My expectation is to allow this to pull back. It tends to move at least 2 to 4 standard deviations, and so you've got to give it some time and space to move. So I'll probably be looking around 41, low 40, mid 40s to 41 to maybe add back that position. IVOL was my steepener. I started hitting out here, and then the stop got hit here, and then I got trounced. This was on the 4th of October. We talked about this a little bit last time. This was my steepener trade. Has not worked. Has broken below the bullish trend line. Is neutral at this point in time. I am out. I thought the steepener was going to work. Because I don't trade futures, I don't really have a way to make this work with ETFs other than that. TUA was a leveraged play on the 2-year, which basically broke bad on the same day when the bonds got smoked. It is still bullish. I am out, but we'll see. We'll see if that resumes activity. I don't know. Finally, from a macro point of view, I got long a small UUP position when my weekly buy signal came in. As you may recall, I was long a lot of like FX, A, B, C, E, and F, and am out of all of those positions at this point in time with a small UUP position. This is when I put the position on. I actually added last week when this broke to a bullish trend. So I have a position. Raphael has a sell signal right here. Nice call. I'm still long. Okay, and in the trading account, a couple things. Just wanted to talk about two trades. One, I got long silver first on the 23rd, added to the position back on the 8th and 9th of October, and had an opportunity to take some off on Monday. Boy, I'm in a private chat and everybody was super bulled up on these days as we were breaking to new highs. And I had just resolved I was going to take some off. I posted that on Monday, so I took some off. I still like it. I'd be a buyer down around 29 to 29.50. And then finally, this was UNG. I actually track natural gas prices, and natural gas, even though this chart's not bullish, which is UNG, the only way I can play it as a non-futures market player, natural gas is through UNG. If you look at nat gas continuous contract, it has held on to a bullish position. This is yesterday's close, just barely, and then it looked on Monday morning, it started to show some strength. So I decided to get long via UNG. What I did is I bought a 13 by 15 call spread, a 12/20 expiration. It's an interesting hold because the thing is up. I think I got it around 13.15 on Monday, and it closed at 14.32 today. The position's very positive. It's returned about 33%, but it's such a high vol asset. It's in the 60s that it swings throughout the day, and it probably would be better with a straight. I would have been better with a straight up call, 13, an in the money call, but I'm not brave enough to do that. So I've been living with a diminished return. I'll hold this until maybe 14.75 to 15 if it goes there. So far, so good. That's what I have for you, gentlemen.
Interesting. Thank you. Can you elaborate a little bit more on your 4-day rule for stop losses?
Yeah. So because positions take me a while to build, and because I often find that my stops because I use trailing stops, and I adjust them on a weekly basis. Oftentimes my stops, and I use a 2.5 times the average true range for my stop level. And when that's hit, oftentimes it's probably, once the asset's run, it's actually probably a good time to be adding to the position. So I take some off. I'm disciplined. I take a quarter off right when I get hit. and then I wait a day, and if it's still below my stop level, I take it off, take more off. If it goes back above the stop level, I'll just let the position run as it is. And it's just a matter of like, I hate personally, I can't live with being stopped out of 100% of a position that took me a while to build when the next day I just get whipsawed out. So it's my method for gradually moving out of a position that's starting to get hit.
Great, thank you. Very, very useful. So, Raphael, I know that you prepared a lot of useful information. So, what do you see in the markets?
Hey guys, yeah, I go with the same charts as usual. So just as an intro, so I'm still long ES and NQ. I had the opportunity to unload some, reload some during these 2 weeks. So I'm gonna go through everything. I unloaded my gold position. I was stopped out of silver the last time I mentioned it. I chose not to get back in. Maybe that's a mistake, but it happens. But I unloaded fully my gold position. I bought Microsoft, and I'm looking to buy Amazon. I'm long Bitcoin also. So I'm gonna go through everything. And one other stuff, the macro research firm I subscribe to, they actually were full Goldilocks until mid of October, and mid of October they actually went short stocks. So I just want to mention that they're expecting some turbulence ahead. Still overall bullish, but they are not bullish currently. So just mentioning, it's a Prometheus research if you guys want to have a look. Okay, let's go to screen share. Okay, we should be good. Gonna make this one small. Up. Put this one on the top. Okay, so first ES. So I got a sell on ES on the 15th of October. That was here. So I unloaded some ES and NQ at that time. So I posted about this sell and mentioned that I was unloading when it happened. But I have to say that volatility looks great for ES. I'm going to go through everything, NQ, DAX, CAC, etc. But volatility looks great. You have trade below trend. You have vola still down. So the volatility of ES itself looks very bullish. Now, the thing is, you have matrix on the daily starting to roll. You have some vol here on in gray. You can see it's actually higher than what we had at the beginning of October. So I added yesterday at between 5825 and 5,802. I think it was a trade. I unloaded some at the end of the day just to make sure I had the right size and the right, let's say, average in the position. But I'm watching matrix. Basically, what I want to see for those who added matrix to their system, you don't want to see price breakdown while matrix daily is doing its cycle down. Okay, so what you want to see is the price continuing to hold while matrix is completing its cycle and start to turn. Okay, if we start to see ES like breaking, I would say this area in the 5,800 area, while matrix is barely starting to its cycle, that's very bad. So I'm watching very carefully that. And that's, for example, another reason why for NQ I decided not to add. So I didn't add yesterday. I was watching. I wasn't stopped, but I'm watching. Volatility looks great. You can see here, trade actually cross trend. So this is very, very bullish. Volatility here in blue looks also great. All three are pointing down, but again, matrix is pointing down. So meaning momentum is going down. So we want to see the same thing I mentioned for ES. You want to see price not breaking down while matrix is finishing its cycle. So I decided not to add to NQ because it was unable to do a new all-time high. We were all expecting it to happen. It didn't, despite the fact that the volatility is very bullish. So if you consider the fact that my macro guys, they are actually short, a lot of people are talking about the fact that a lot of market participants are actually hedged in the market, making this market very choppy and unable to break out of a range. I would say that's not the time to be aggressive. So I'm considering that. Okay, so let's make it quite simple. You want to watch matrix. You don't want this thing to break, NQ to break, while matrix still hasn't finished its cycle. So watch those two. But Vola again looks very good, very bullish, exactly what you want to see before the start of a new bull run. Now let's go to Europe. So DAX, same, looks absolutely amazing. Anytime we had a sell-off with a matrix cycle going down and some vol, let's say pop, it was always a deep buying. And if we are considering the profile of volatility, we currently are experiencing another deep buying opportunity. Okay, so matrix is down. Here we have a pop in vol. This is another deep buying opportunity. But again, you have to be able to maintain two thoughts at the same time. So it looks very bullish, but because of everything I told you, still need to consider that. So of course, either you hedge your position or you make sure your stops are on. CAC, finally trade of volatility on the daily, finally crossed trend of volatility. So it should be the start of a bull run. Okay, it should. That's normally how it works. Now price should be taken up by the move of trade to the upside. So that's another thing I'm hoping for. This is what should happen, but again, we are quite dependent on other stuff happening. Now Japan and England, FTSE, they look the same. For me, they are in chop. I have mentioned that repeatedly. The UK is like it's hell to. I mean, why are you trading this? It looks like hell. It's chop. Nikkei, I mentioned also. I think Vi will disagree on this one, but for me, it's the same. It's very choppy, and I don't think we're going to see a durable move until at least trade start to come near trend. So for now, it's just a chop, at least in my opinion. Now let's go to dollar, DXY. So I think it was almost a month ago. So we mentioned, I mentioned two scenarios, and after 2 weeks, so on the latest show, we discovered that it was the scenario 2 that manifested. So scenario 2 is basically the arrows here. You go up, you definitely confirm a regime change in the asset. You go down to confirm the trend being the new floor for the higher low, and then we start to rip with the asset beginning its bull cycle. So for this one, I got actually a sell. Sorry, I'm gonna make it up here. Yeah, you can see the small s here. So here. So this is the sell signal, tweeted it. So I was expecting this one to happen. I just didn't know when. So yeah, it happened there. For now, let's say top tick, but we shall see. So my expectation is we go down, we go in this area where trade and trend will be when this happens. It will hold, and then we make then higher high. Now, the question will be, where are the correlations when it happens? Another reason why I have an issue to be bearish right now, despite everything I told you, is I'm looking at the correlations, and the correlation short term, 5 days. So I want to see that propagate to the 10-day correlation, of course. But on the 5-day, we have big inverse correlation between the dollar and basically everything except XLE, which has its own life. But you can see the inverse correlation is insane. So let's say the base case for the dollar is what I'm expecting. We should see a rip in all the assets that are inversely correlated to the dollar. So that's another thing to consider. But of course, I'd like to see this inverse correlation propagate in the 10-day as well. Now the VIX. So I mentioned 2 weeks ago that this one was very hard to read. The reason is it's, for me, currently very hard to read is because the value of volatility of VIX, so the blue line here, and the value of its trade of volatility, both are very high. And as it happens very seldomly, it's very difficult to have a definite opinion on what's going to happen. But what I'm sure should happen is volatility of VIX will go down. It has to go down. Cannot stay in this area. It's just impossible. Volatility will have to back down. The problem is if volatility of VIX goes down, VIX should go up. I mean, that's just they are inversely correlated. So the question is just how big will be the move in VIX when this happens. Okay, you have to expect this blue line to go down. Okay, so now I'm gonna play devil's advocate for my bull case. Matrix is actually turning on daily. So momentum for VIX is shifting to positive momentum on the daily. And you have a volatility of VIX very, very high. So that would not be crazy to think that during this move on Matrix, we should see vol go down. So now the question is what VIX will do. I have no idea, but this setup is happening while we have the election in the US. So you can imagine we have vol at historic high, vol of VIX, sorry, at historic high, trade of volatility of VIX at historic high, Matrix daily, it's about to turn positive for its daily cycle. And you have election in a week or something. So I would say you have stops or you have hedged your position if you are long. Really, I'm not joking. This is not a fun setup. Okay, now let's go to CL. So CL, naughty boy, he did fake breakout on MFR for 1 day, and then just crappy pants. Just went back to neutral for a few days and then back to bearish. And I mentioned what you should be looking for if you are using my trade and trend volatility indicator. And I told you CL is just not looking like something that is about to go bullish. So expectation is chop. It just couldn't hold MFR bullish trend, so that's what I see. It's chop. Good luck if you're trading that on the long side. Volatility also is quite elevated. So gold and silver. So rip and ripper. So these two, they just I mean, it's fucking insane. I mean, this kind of move, I don't think it's very often we see that, right? So I was very surprised because we were at my daily mean for already some time, and this thing just kept ripping. So I went back and I found another one for daily mean for trade. So it's this one. If you have access to my scripts, I encourage you to have a look. You will find one more. Yeah, we are very, very, very low for the vol of gold. I mean, I don't want the trouble anymore to, okay, let's manage to call the top exactly on this day, etc. The top is coming. The top is coming. So sure, you can get another push, but the problem is when it tops and volatility finally explodes, you're gonna say, shit, I should have sold there. So I don't want to have to deal with this trouble. I think it's gonna top soon. I have no idea what will be the reason, but I can tell you it's coming soon. So concerning the correlation with dollar, it seems antithetic, but I can tell you that currently trade is also at historic low. So the next paths are either a sell-off, big sell-off, or a huge consolidation of a few weeks. I also, it's a broken record. I have told you that for a few shows now, but yeah, it's gonna happen. It's just it's a mathematical certainty. Silver looks the same. This one I mentioned before that at the time gold was at its mean too. Silver still has room, and you can see here the vola looks awesome. It looks great, but now we are approaching actually the mean, historical mean for trade of volatility on silver. So again, I got stopped out. I think it was on this move here, and I chose not to chase. So good luck, good for you if you were in this move, but yeah, I don't want to deal with that. I think the top is coming. I just don't know exactly when, and I don't want to do it. Now Bitcoin. So this one, naughty one. I was long here originally. Got stopped out on this move because I should not have entered here. I should have tried to enter here. Got stopped out, and I didn't have the balls to buy, or I wasn't watching, or I don't know what happened, but I didn't enter here, and I chased actually around 60,000. I added more yesterday at 65 and change somewhere here in this vicinity. So I'm long Bitcoin. Vola looks great. Vola looks great. You can see here we had the cross of trade and trend. We have bottom of the range, just chasing price. The issue is matrix is going down. Okay, so now we want to see the same thing that I mentioned for ES and NQ. We don't want price to go down while matrix on daily is doing its cycle. I don't think it's gonna happen, but again, I have stops, and I have chosen to do it because this time we have other indication that this move is could be the right one. We had the cross of trade and trend on Ethereum, which I mentioned should happen when you have the next move on Bitcoin. You have also Ethereum breaking trend on MFR and attempting to hold. So I know, for example, Raghav that we interviewed went long here on Ethereum. Let's see. I think it's totally it's a good idea. No questions asked here. Sorry, I'm trying to rush so that I can talk. Then the yields. So yields, we are out of the chop box I mentioned. When was it? In August. as we expected. Now Vola is down, trade of Vola is going down, but same, I'm starting to get some sales. So I got some sales on the 2-year. Starting to get some sales on the 2-year, got some sales on the 10-year and 30-year. We had cap on MFR, but I can see that the cap is already gone. What does it mean? This thing will go? I have no idea, but it has room. If they want to take it up, it has room. Vola is going down, trade has a lot of room to go down. So when these two guys cross, you're going to get the confirmation and God knows where it goes. But yeah, you have the sell for now. You have the sell, so maybe some hindrance for the short term. 10-year, I started to get some sell. I think it was here. Started to go down, confirm MFR trend. We have cross of trade and trend of volatility, and boom, we are trying to rip again. We had a cap is gone. 30-year looks the same. Cross of trade and trend. I had some sales here. Retested MFR trend, boom, confirm and go. I'm getting some sales also here, but Vola looks great. God knows what's going to happen. I mean, if people are still on bonds, good luck. Now let's finish with stocks. So I want to congratulate the people who were long NVDA. It's beautiful, very beautiful. I mean, look at that. Look at that volatility. It's just magnificent. Here you have the cross of trade and trend. You have the confirmation of MFR trend somewhere here. I think you still have, or you had a position on NVDA, just magnificent. It's beautiful. It's a case study if you want to study volatility for a stock. You want to go long, chase something that is already up because its volatility is nice. Let's go with Google. So Google is the one that looks the worst in the one I'm watching for tech. Vola looks better. I mean, it's starting to point down. It's starting to try, but I have to say this one looks the worst. It's worse because of the breakup talk they are talking about for Google. I don't know. Just wanted to point this out. Others look much better. Google looks the worst. So if you are buying Google, not a great idea. I'm going to go with Microsoft and Amazon, and then I will pass the mic to you, right? So I bought this one on Monday. That was, here. I bought this one on Monday. I already mentioned that I was looking at Microsoft and Amazon to buy. I like it. I like the setup. I like the break of trend. I like the fact that we are making consistently higher lows. I think it looks like the October 2023 setup. So I'm thinking this one is going to rip. So of course I'm buying before earnings. Let's hope I'm not getting exploded on this one. But I really like how it looks. So let's see. I bought right before the change of trend. I don't care what happens during earnings as long as we don't break this low. I'm gonna watch that. And finally, Amazon, I'm looking to buy it. I have a regret because I should have bought on the 8th of October and didn't. Let me show you. It's here. We had the cross of trade and trend, confirmation of change of trend in MFR. Again, I don't know why I didn't buy. I should have. If you did, I think you did good. So I'm watching. We have earnings soon. I really hope we get a retest of this area to get another shot. Let's see. Again, I'm not being dogmatic. I mean, there's a lot of chatter about, like I said, stocks being overvalued, etc. You've seen what I told you about the VIX. But if I disregard everything else, Amazon looks like a buy in this area, so I'm going to look to buy. And of course, I'm watching the other stuff, the other dark stuff. that could change my mind regarding my bullish view. Okay, that's it, guys. Thank you.
Thanks, Raphael. Great as always. Well, regarding turbulence in the markets, I also expect that. Of course, elections. So, what else can you expect? We will see what happens. But now I'll share my screen and we'll go to the signals and what changed. So, if you remember 2 weeks ago, when XLU was somewhere here, I was talking about, okay, maybe this rotation to defensives is on pause, and actually it would benefit other sectors, equities, so more risk on, and of course, tech. Yeah, but as we can see now, and later I will move to the correlation tables, and we will see that from correlations as well. But as we see now that XLU is back up where it was, actually 6 days ago made another new high. And yeah, but now it's chopping. So I will touch on that now, and then I'll touch on what it means for me in my process and what changes. So here I have in my fractalrange.com this watch list. I just call it important to watch, but it's not that. It's actually some just tickers that I watch every day. And it's filtered by Hurst exponent. Yeah, so first of all, we see that TLT has a very, very high Hurst exponent. I'll talk about it a little bit later, but now let's move to XLU. And XLU is actually at the bottom of the list, and it's in a chop territory. 0.6 in a 3-month Hurst is not good at all from a trend perspective. But even though it's quite choppy, but still capital went back into it, and my interpretation of this is that it may be hard for indices, so for overall markets to rip. I know that Raphael was expecting a rip, and 2 weeks ago I was also expecting, but now I think that we will have a range or a chop for a while. Important things to watch will be XLU correlations and dollar correlations. Dollar correlations now are amazing, very interesting, and yeah. So let's move to correlations. As always, so XLU correlation to the SPY on a 10-day basis is 0.24. But what I like to look at is the actual change in these correlations. So 5-day change in 10-day correlations. And yeah, so again, the correlation is widening. So yeah, correlation weakened and weakened by quite a lot in the last 5 days. Now, overall, risk perspective is still not concerning at all. Average correlations are quite low, actually in the middle, so 0.57. These are not worrying. Stock-bond correlation is also, stock-bond correlation is basically neutral, at least when we take a look at the 10-day period. And when it comes to stock-bond correlations, I think of it as regimes, as risk regimes, actually. So yeah, of course, now we are in a neutral regime. When the correlation is negative, basically it's more of a risk on or quote unquote more normal regime. Yeah, so of course we were there, and 2 weeks ago it was quite nice, but yeah, now we are in a neutral territory, so we'll see. So yeah, I will go back and finish my thoughts on defensives and what it can mean. So I will continue to watch. Again, I closed my positions even more than 2 weeks ago. During our last show, I already had no position here. But yeah, I will monitor these and I will monitor correlations to see whether it can be a good idea to buy NQ or ES or not. For now, it's definitely not a good idea. So let's move to good old futures. So yeah, and 2 weeks ago, just because of this defensive situation, I was thinking, yeah, that if it continues, it may help NQ to reach previous all-time high. Well, now we all know, of course, that it's not what happened, and I don't know when it comes to swing trading or more longer-term trading. I don't know what you can do here, but definitely it's not a good-looking situation. So, yeah, if defensives will stop going up and not only stop going up, but will reverse, then I will again be more willing to take a risk on the long side of tech and some other sectors, but mainly in futures because that's what I trade. So yeah, this is the thing. I think that now it's hard to expect a strong rip in the market. Well, yeah, we know about the election situation, so we will see. I will definitely trade that night. I remember 8 years ago when Trump was elected, I believe, yes, yeah, it was amazing in futures. I was trading till 7 a.m. or something. So basically, whole night in Europe, I was trading with futures, and yeah. So I don't know how. Yeah, but 4 years ago, it was not that interesting. So I was also in the office, but after a couple of hours, I left because I realized that nothing will happen. But yeah, 8 years ago. So most likely, I will do that again. But yeah. So my point is now I see no rips. I see range bound action, or our word is a chop scenario, just because of that, and correlations will be a very good guide, as always, at least in my process. Correlations are very important. Yeah, so let's move to TLT, and I don't think that there is much to say about this picture. Yeah, so as we were talking 2 weeks ago and 4 weeks ago and months ago, nothing changed, and yeah, doesn't look good, and definitely it would not be a smart idea to try to catch this knife. So from correlation perspective, let's change the period. Let's go to five days. And yeah, so TLT correlation is also basically neutral, but it went up from went down from positive territory. So actually, risk is of overall market is decreasing, but yeah, almost no short-term correlation between stocks and bonds, and it makes it even harder because overall indices are chopping. So it's hard to have any view on bonds, and I know that Ted and Raphael talked about yields a lot, and it was very useful. But for me, it's just now I don't know. Let's wait for another 2 weeks. For me, this is something that I would not touch, and yeah, yeah. So this is my overall view on the markets. And 2 weeks ago, I also was talking about, hey, oil can become interesting, but as Raphael said, I mean, yeah, it was not interesting at all. And yeah, so oil tried to reverse into a bullish trend, but failed. So oil is not interesting at all. My NVIDIA was a option called spread, so it already expired. of course, yeah, it was a great trade, but I was not expecting that move. Yeah, NVIDIA was amazing. Now Japan. Before the show, I was talking to that maybe Japan may be interesting, but Raphael said that I will disagree with him, but I don't think that I will disagree with him. So I will explain. Over the last 1 year or maybe more, I started looking into Japan, especially Nikkei futures, way more, and I really like this instrument. So, but yeah, so I was talking that it may become interesting on the long side, but I can't disagree with Raphael. But even if it becomes interesting on the long side, well, not here and not now. So yeah, from a regular term perspective, ranges are signaling quite a nice long, but I would want Nikkei to retest the trend. So a couple more of down days would be nice, and then I would be looking to signals. I know that there are also in Japan there are some rumors and narratives about elections and some different party winning or something like that. But yeah, so that is causing a lot of volatility as well. But when it comes to Nikkei, I'm not sure. I'm not on the short side. So I mean, I don't think that. Well, it's very hard to talk about that when this thing happened, but I can be wrong on that, but I don't expect that this thing will happen now again. Maybe that's the best way to put it. So, yeah, I don't like the idea of pressing the buy button now, but I think that we will have some opportunities in buying Japan, and we will see. So I'm definitely not shorting, and obviously, because rule number one, never short bullish trends. I think that makes sense, and it saved me a lot of money, and I hope it will save you. Just one rule: don't buy bearish trends and don't short bullish trends. So it makes a lot of sense. Yeah. So the main point of my talk is that actually, because of the situation in the defensives and because of the situation in overall correlations and the low Hurst in XLU, which just means that basically we are entering in the chop territory, but at the same time, because actually chop territory would be good, but because if XLU stayed down and then turned into chop, well, I would say, okay, so everything is good. Nasdaq up. But yeah, but XLU reclaimed everything, and the rotation, it doesn't look like it's over. And if it decides to range there close to the highs, it will be not as easy for risk-on sectors to rip. So yeah, that was what I meant in the beginning of the show when I said that there are some changes. And yeah, compared to what I said 2 weeks ago, when it comes to rotation from defensives or into defensives, basically everything changed because it looked like it's over, but for now it's not over. So be careful, and yeah, can't wait to see what will happen in the next 2 weeks. So that's it from me.
Nice, bye. I don't see any question in the chat. Nothing. So,
I have a question. What do you think about this tight correlation between gold and the dollar, both going up post FOMC together? What gives first, the dollar or the gold?
This time I will say that the dollar. I mean, I think that the more important move now is in gold. That's what I meant. So the dollar will give first. That's give up first, or with these yields and expectations in market participants and macro guys, expectations of inflation going up, which of course, if I had to talk about macro, which I don't because I consider myself total newbie in that, but I would also think that I would also say that inflation will go up, and yeah, so I think that's. What do you think?
Me? I don't know. I mean, the dollar, I think, is just. It seems hard to believe that until yields come off in a considerable way, they're up 65 basis points off the low of the 10-year. And I mean, I would have expected the gold would have a hard time with that. I mean, it makes total sense with the dollar and yields going up at the same time. It doesn't make sense that gold with real yields compressing, that it is going to continue to go up. So I don't know. It's a conundrum to me, and it's probably more of an argument around dollar debasement and concerned about whichever administration comes in and takes over the reins on the fiscal policy. I don't know. To me, it's hard to reconcile.
Yeah, and actually, change in administration in the US, at least I think it's my opinion of this. I have no idea, but change in the administration in the US will turn the money printer on, I think.
Never come off.
Yeah, well, yeah, but even more on turbo mode. So,
yeah, probably.
I don't know. We'll see. But,
yeah.
Yeah.
Raphael, do you have any opinion on this?
I would agree with Vi regarding at least short term. The question will be when we have, so dollar goes down, and then we establish a bottom that is higher than the prior one, and dollar start to rip again. So I think this is when you get probably metals to be destroyed. Not really destroyed, but that's when they will considerably go down, and we enter either crash in those or consolidation that will last. But yeah, maybe short term, yes, dollar sell off. I mean, do you know anyone who's not bullish on gold?
Yeah, also true. Yeah, also
it's
true.
It's annoying, Nobody wanted to buy when we changed trend, and now they are all like, it's the same as they are like Bitcoiners.
We should ask this question to Peter Schiff.
Yeah, it's exactly that. So I don't know. Let's see what happens when we after the sell-off on DXY and we have a higher low. Let's see how gold handles. And actually, I'm not interested in that part. I'm more interested in, okay, where will the bottom be on gold then? Will it be a buyable dip, or I'm already on the next play. I'm out, so I don't care. I mean, if it rips, it rips. Good for them. But yeah, from what I see in terms of volatility of gold, this thing is gonna top. It's gonna top. It's just a question of nights. It's how long is this thing continue to rip? So probably dollar first, then higher low, gold down, dollar keeps going higher. Yeah.
Okay, makes sense.
Now I'm looking into the correlations because I will admit that I always look at the dollar correlations with some other stuff, but I never look at gold. I just don't trade assets I don't believe in or whatever. And I'm wrong. It went up, but I never trade gold. I don't know. Yeah, so when I look into correlations from gold and dollar, if it stays there where it is, and where it is highly negative correlations, it's hard to expect for the situation to change. It's just because it looks very stable in a negative correlation is very, very stable, and it doesn't look like it wants to give up. Yeah, so if we don't have any questions.
Let me check once again, just to be sure. Yeah, nothing. Nothing. One thing,
nothing.
though, before we close, Bitcoin to the moon.
As always, Bitcoin to the moon, and
as always.
yeah, as always, yeah. So yeah, thanks everyone. I hope it was useful. See you in 2 weeks, hopefully. I'm sure this period will be very, very interesting, and also not only interesting but very important. So thanks, Ted. Thanks, Raphael. Thanks everyone for joining, and see you. Bye.
See you in 2 weeks. Bye-bye, guys.